Hello and welcome back to another video. Today we're going to be talking about the bulls and how they're having a party. We have had quite a few green days in a row, notably 4. We can note here that the last 4 days are pretty bullish. We do have a little bit of volume dropping off, but it is the summer. So what exactly is happening and where are we going to go into Friday? So here we can note that we have, again, 4 back-to-back green days. That is matching the longest winning streak so far this year. So if we are able to go green tomorrow, that is going to mean that is going to be the longest winning streak of 2022. Wouldn't that be something? I think it would be. So what exactly drove it? Well, there were a few things. We had some Fed commentary this morning and this afternoon from Bullard and from Waller, and they were pretty much saying the same thing. Here is an excerpt or the most important comment that I saw. I saw this one here. Possible rate cuts could follow once inflation moderates. When could that happen? Once we get to 3.5%, we could see where we are on inflation. Then we could tweak, including possible cuts. Expect most of the disinflation to come in 2023 rather than in 2022. Bullard and Waller also talked about having a soft landing. So a soft landing pretty much means that we are going to be having no recession, and we are not going to lose a lot of jobs, and we're going to have stability. So I think that's what the market is currently looking at. Whether or not these Fed officials are correct, I don't know. They're smarter than I am. And I would just note that we have to look and see what the market did in reaction to their comments. So yesterday we were talking about how the Fed had a positive tilt on the stocks, and we also did not have a negative follow through. So when I look here at the chart, what I am noticing, again, we talked about that inverse head and shoulders on on the daily time frame, but more evident on the hourly. And now we can note that as we blow up the chart to make the candles a little bit bigger, we have now bounced off that 380.5. And this has been a very important level because we have been seeing some liquidation at these areas. There's actually one more comment that I saw here, and this comes from CalPERS. So again, CalPERS is the very big fund which manages the California pension fund. And they unloaded $6 billion of private equity at a discount. So there is some liquidity happening, but because we are back above that 380.5 decisively, meaning a few percent above, we're now sitting at about 2% above that area. So now that we're making progress and we have we're matching the winning streak so far this year at 4 days. Where did we get to? Well, we made it all the way to our gap zone here. So if you remember correctly, this is where the heavy short started up here at about 400. They started really heavy here, added on, and then we went all the way down. So we can now note that the area between 380.5 and roughly 390, or a 10-point range, is really where a lot of people are going to be having their P&L or their profit and loss really start to oscillate. So as long as we are inside this range, I would call that consolidation. And I'm really watching to see what we can do here at about 390. This is going to be a very important area. This is important because we're closing out the week tomorrow. So as of right now, we are right around the high of the day. We had indecision yesterday, right around the high of the day today, which means that we should get follow through like we got today. We gapped up, pushed up, sold off, and then rallied up. This is actually looking pretty bullish. Hard to argue it isn't. And as we look across the different asset classes, I'm also noticing some pretty bullish action, including Ethereum, Bitcoin, the trillion-dollar companies, including Tesla. Put call ratios are now right back down to a more reasonable level. All ETFs are doing well, and ARK is also leading the charge. So this to me really seems like maybe, again, we're seeing peak hawkishness from the Fed. A lot of this depends on whether or not they're actually going to be accurate in their prediction that we're going to get a soft landing and that we're going to avoid recession. So we're going to have a lot more data coming out in the next little bit here, but that's what we have to focus on. So anyways, fear and greed. Well, we've exited extreme fear and we are now only inside of fear territory. So this could also mean that we're starting to see some relief. So that relief could turn into a reversal if we're able to close back above 390. So I would also be watching for 393.17. That would be a higher high on the week. And that would note that, again, this is kind of a preview for what I want to talk about tomorrow when we do the stream. Low, higher, low, higher, low, higher, low, high, higher, high, higher, high. So we have 3 candles, which are forming a pattern here. And now on the 4th week, we have an inside bar. So if we're able to actually reclaim last week's high into tomorrow, which would be roughly another 1% rally from here, that would mean that we have 4 candles with higher highs and higher lows. And for me, that would be bullish. So I'm watching really closely for that. Next thing to look at here is going to be the heat map. So we can note that there is breadth and there is depth. We can note that almost every sector is going higher. Where the pockets are a little bit less green are going to be healthcare, and then also here for retail. These areas here have not really been doing they've been doing good lately, so it kind of makes sense that we're seeing rotation back to what people would normally expect. Also, zooming out to year to date, we can note that some stocks are now actually exiting bear market territory. Oh, that's on the year, sorry. Let's go year to date. Let's go by no group to see the biggest block. So Google exited bear market territory. Apple out of bear market territory. Who's next? Come on, Microsoft, you can do it. Let's go up. So watching that really close here. Otherwise, it's still pretty mixed. We see a lot of names that are still quite devastated. I know that people enjoy me going through mostly the large ETFs, but what I do want to point out is just that we're noticing some pretty bullish action on some other ETFs, including ARK. Noticing some meme stocks are also catching a bid. So what I want to do today as we're going into tomorrow is if we're really going to be bullish, let's look and see what we are seeing on the tape. So S&P here, right? Looks pretty good to me. If we're able to reclaim that high and then also break the downtrend, we look a lot better. Going here to QQQ, we can note that it is starting to pull ahead. We've almost tested last week's high as well, and we got a higher low. And last week's high was at 2965. So if we're able to break that, that would be very bullish too. We're much closer on here than on SPY. Volume is a little bit soft, but that could be okay. Next thing I want to look at is going to be BTC because it's actually approaching its 200 weekly moving average at about 22,500. And it's bouncing off a very key area. That goes all the way back here to 2018 and that previous top. Next one here is going to be Ether or Ethereum. We can note that it is already back above 1209 or its 200 weekly moving average. It is currently stuck. BTC was able to bounce off the 2018 high. And for ETH, that'd be at about 1440. So if we're able to reclaim the 200, reclaim that 1400 and get back above 1500, that would get me a lot more bullish. Finally, what I want to look at is going to be Microsoft because this is the stock that would be the next one to exit bear market territory. And what do we have here? We got a really big test. So if we're able to take out this relative low or the pink line here at about 270, or go up by about $1.50 more, that would be a bull break. We're going to stop going down, so we're going to break the downtrend, and we'd also be above that key relative low. Watching that really, really close. Finally, looking at ARK, we can note that we are now all the way back up to that other key relative low, and it's actually above it. So that relative low is going to be the red number here at 46.2, and we did actually break that. We got a higher high versus last week as well. So this for me, now that we're seeing that the riskiest assets, including ARK, BTC, ETH, and QQQ, what this means to me is that the market is currently believing the Fed that we're going to be going up, that maybe we have peak hawkishness already baked in. When we look at the dollar, though, this is where there is a little bit of uncertainty for me because if you look at the percent gains for SPY in the week, we're currently up by about 2%, but DXY is also up by about 2%. So what does that mean? It either means that the S&P is really strong in spite of the dollar going up, because right now we actually broke back above 106.5, which goes all the way back to our 1989 high, 106.56. And if we now zoom into our daily chart, we can note here that we actually put in a low of the day, which actually back tested that area and we passed. So on the daily chart here, we can note that we did backtest the high here from July 5th. We passed that, and it actually was above the 106.5. The challenge with the dollar is just that if it's going to keep marching, we could be going a lot higher. I'm talking all the way up here to about 120. That would be a lot more pressure on the market. That's about 13-14%. So at a very high level, that is what I'm watching for going into the rest of the week. The S&P here is going to be our #1 barometer. And we are able to avoid going all the way back to our 200 weekly moving average if we're able to build up some pressure here with all the big things coming out next week, including, I believe next week we've got CPI and then earnings season kicking off. That is going to be the next most important thing for me after this. So easiest way to summarize what we're doing is that we're climbing the wall of worry. There are always things to worry about. But as we are currently matching the win streak for the S&P so far this year, if we're able to notch another green day for tomorrow, that means we're setting a new record for 2022 in terms of us actually getting back-to-back green days. We have to overcome all this red volume, but the fact that we are above 380.5 by about 2% means that there is some pressure building up. let's watch for that to release tomorrow. If you're interested, come and check us out for our end of day stream tomorrow for the final hour. And otherwise, thank you for tuning in. And the video that'll queue up here in a moment will give you a deeper review of my weekend thoughts in terms of where we came from and how we got here. Otherwise, thank you for watching, and I look forward to seeing you tomorrow. Thank you.